Supply chain management has become both an art and a science, with executives tasked with building more resiliency while also increasing flexibility, reducing lead times, and jumping through hoops to comply with increasingly complex regulations, which, adding to the confusion, are different in different markets. No wonder most people talk about improving supply chains, but very few actually do. Realistically, it's difficult enough to simply manage existing systems without having to try and introduce new ones. I'm Jane Singer, and welcome back to A Seat at the Table. Each week, our listeners in 133 countries join me in sitting down with industry leaders and innovators to discuss how we can make our businesses better. Today we're joined by Dean Clegg, a supply chain consultant who previously was Global Sourcing Director at Sainsbury's, where he led a complex supply chain through both the pandemic and the transition to Brexit. Prior to that, Dean led the successful integration of Argos stores into Sainsbury's. In this episode, Dean will be discussing how to become more efficient and reduce lead times, determining the right technology to optimize your supply chain, the game-changing importance of building seamless supplier relationships, and rethinking how we reduce waste to achieve greater sustainability. At the foundation of the best supply chains are highly skilled executives with hands-on expertise managing supplier relationships, leading teams, and understanding the product. Finding these people is not always easy. In fact, it's become increasingly difficult. That's why leading companies turn to AsiaNet consultants to help them fill key positions. AsiaNet has over 3 decades of experience successfully finding the best people to fill even those really difficult to fill roles. You can learn more about them at their website at asianetconsultants.com. I'll also leave a link in the show notes for this episode. When global sourcing directors want a sharp view of their Asian supply chains, they turn to the current situation in sourcing. It's a 6-page quarterly snapshot that highlights essential shifts, alerts, and opportunities, along with feedback from other sourcing executives about how they're reacting to the market. To learn more about the current situation in sourcing and to access the latest report, use the link in the show notes for this episode. Meanwhile, let's sit down with Dean and find out how to 10x our supply chains. Well, Dean, thank you so much for joining us here on A Seat at the Table. I'm delighted to have you back on the show. The last time that you were on the show, your episode was and still is one of the top 5 in all of the recordings that we've done in all of the episodes. So I think there's a lot of people around the world who'd be keen to hear what you have to say, and certainly a lot more than there were years ago when you were first on the show.
Oh, thank you so much, Jane. I feel very humbled with that positioning, and so nice to connect again. I suppose an interesting place to start our conversation is to reflect on the sourcing and supply chain in terms of what's the current state, and attempt to kind of maybe tease out in terms of what are the key context points that are influencing the agenda and change. So with that in mind, I think there are probably 4 key context points. I know everybody but maybe have a slightly different view on this, but in my view, 4 key context points. So the first one is around COVID. And it's quite interesting that when we last did a recording, that was on the backdrop of COVID. And I think COVID 3 years on is really well documented in terms of where those pressure points were within supply chains and within sourcing in general. And again, clearly significant learnings, particularly around the importance of supply chain security. Well-documented opportunities identified, whether that be agility, speed to market, how to take cost out, and how to drive margins up. And I suppose against this context point, my key question, and indeed part of conversations with the larger retailers, is has that change truly been embedded, and the difference between words and action, and possibly are old practices creeping back in against the backdrop of maybe the lack of robustness of a very clear plan. So first context point, COVID. Second context point, I think listeners will be very familiar with, is around the cost of living crisis, the global cost of living crisis, and rising inflation and increased cost of debt. All this driving the need to take cost out, a real business imperative in the last 12, 18 months. And we know that, in terms of that inflationary piece, it's really difficult to fully pass on those costs to the customers because they would not be taken on board. The markets that retailers operating are incredibly competitive as they've always been. And therefore, you can't pass that inflation on. So you need to be more efficient. And in my view, what that means is a different relationship with suppliers. And I'm sure we'll maybe touch on that later. So I think the cost of living crisis is another catalyst for change and driving action. So if you kind of pause there for a minute, you kind of think there's been two big moments in time in the last few years, COVID and cost of living challenges that have driven those change catalyst points. The third context point is around the consumer and a rising consciousness around sustainability and social compliance. That remains a growing inquisitiveness. And, a word that's been well used now is the importance of circular economy, taking waste out at every stage of the process. So price and value and quality, as we know, are still really, really important. But actually, the whole sustainability, reducing waste agenda is definitely coming firmly back into play. And the fourth context point, is around technology. And I think this has been the greatest step on, actually, in terms of since we last formally spoke. So technology, whether that be around AI, machine learning, and how that is supporting in terms of more efficient development, better forecasting, better monitoring of trends, signing off of samples, the cost breakdown of product supporting negotiation, and ultimately around having quality data and knowledge to make better decisions. And I think the interesting point here is around, what does that mean for teams? And I'm sure, again, we might touch on this later, but the requirement for pretty tech-savvy colleagues to exist within supply chain and sourcing teams. So I think, just on the context piece, I think, the summary 4 points, big 4 points for me would be around sustainability of a competitive advantage, becoming more efficient and taking cost out, continuing to do that, enhancing speed to market, supplier relationship management, supported by technology. So I thought that might be a good place to start.
Yeah, I think so too. And I think that, you're right. There has been a lot of sort of post-mortem on, everything that happened during COVID and how it impacted supply chains, and certainly around the cost of living crisis with regard to inflation, which looks like it is starting to come down a little bit now, which is good.
Yeah.
So I think that it might be interesting to dive a little deeper into what you see as the technologies, not that have been introduced to the market, because a lot of things have been introduced, but what do you feel is, in a practical sense, actually making a difference now, being implemented and actually making a difference?
It's a good question and a good point, Jen. I think the answer is that it's impacting right the way across the board. And for teams, I think the success factor here is about really embracing in terms of technology tools. As I said before, I think it is the biggest opportunity for sourcing. I read recently that over 50% of large retailer brands stated that their number one hurdle was not having effective digital tools. And that was quickly followed up, actually, with an associated point or comment that there is also a skills gap, and that teams and colleagues are not being trained or maybe lack the required capability to fully utilize the technology and digital investment that's happening. And I think, it's all about, as we said earlier, it's all about accurate, detailed data to support decision-making, resulting in that improved efficiency and lower costs. So I think in terms of, to your question, some of the examples, certainly where I've seen analytical tools and technology supporting commercial teams, is the first one would be the cost of a SKU and product, in terms of really supporting a margin and price negotiations. So whether that be around cost teardowns, bottom up should be cost, making sure that all that data is readily available, not just readily available, but analytical tools are actually almost driving what the answer should be by looking at commodity material prices, as I said, cost breakdowns, what's the true cost to make, labor costs, etc. And all too often, maybe this is a little bit of a sweeping statement, but all too often, negotiation around price is really purely done around looking at historic numbers. So what was last year's price, and therefore what should this year's price be, and maybe supported by looking at volume. And as I say, that's a kind of very high level sweeping statement, but I think for a number of brands and retailers, that's not too far off actually, in terms of not really having all that information at your fingertips to effectively complete a really robust negotiation. The second one I would say is around sales trends, probably not a surprise to the listeners, but really around accurate and timely forecasting. Now, that to a certain extent has always existed, but actually I think the efficiency of the technology available now and the level of data is really helping to generate much quicker decisions, and the flow of information between the retailer on what's selling, etc., right the way through to the supplier, much faster than it's happened before. And then maybe one more would be around digital samples, again tying into this efficient way of working, a one-touch approach, removing duplication, and using technology in terms of whether it be around sharing 3D imagery, right the way to having some really quality conversations between the brand and the supplier in terms of what the final design should be, but doing that from a distance as opposed to continuously sending samples, etc., or indeed organising for long distance travel. So again, speeding up the whole process. So maybe there's some examples to share.
Yeah, I think that's really interesting because there has been really an abundance of technology that's come onto the market. And sometimes it can be a bit overwhelming for companies to look at all this and try to figure out what's the right technology, because everything promises to do so much. But when you actually are applying it, it can be difficult to really understand what will really move the needle, what will justify that expenditure, not only the CapEx, but also, like you're saying, the learning curve for onboarding staff and everything that's involved in introducing new technology. So I think that, as you're saying, we need this technology, but trying to figure out what we need is oftentimes a bit challenging.
I agree totally, Jane, and hence why probably of no surprise that going back to the point that over half of major brands have got that high on the agenda in terms of asking those very, very questions, particularly around, this is a big investment as well, in terms of what technology do we actually use, and actually who's going to support in terms of that delivery, implementation, training, coaching, etc. I mean, one of the final point maybe on technology that came up, actually very interesting, actually, in terms of this was with a large UK retailer, and they were talking about technology supporting in terms of governance. And initially, I said, what do you mean in terms of governance? And this was all around cost and margin governance. So if we just kind of pause a little bit on this, so we know that there is a lot of moving parts between input margin and final margin, a whole host of things that happen, whether that be around markdowns, returns, et cetera, and one of the challenge often is that the sourcing supply chain team kind of will have nailed their colours to the mast and say, we've delivered a really good job here in terms of the margin that we've achieved, and therefore the additional profitability. But when it comes to the final point, in terms of being able to really prove that actually that has indeed been delivered, sometimes is a little bit tricky. And therefore, on this particular retailer's pad, they had analytical tools / digital technology as being the answer to helping them really at a finger touch be able to actually articulate exactly what's happened to that margin and therefore what has actually been achieved.
I think you're right. I think that's at the moment probably the most practical application for where most brands and retailers stand right now. Now, I think another important point that people are looking at the moment, now that we've seen logistics settle down, so therefore we have a little bit more control over where things are going in terms of shipment timings and so forth. And that is becoming more efficient and reducing lead times so that we can hopefully avoid some of the inventory mismatch and, everything that, we've sort of felt through 2023. So what are you seeing around that? What are you seeing around perhaps shifting sourcing locations, country of origin, Where do you see that global sourcing footprint shifting to? We're going to take a quick break now, and then we'll be right back.
We were hiring when we were making 50 to 100K monthly losses.
And why? Welcome to episode 1.
I can't think of a single founder who's been around for a decent amount of time in business who hasn't had their tunnel of year. This was that year. We're going to be okay, yeah, Sheree. Some are going to hear this and think, you TDP. But hear me out. You only have to do the math to understand that very soon we were $500,000 down.
Well, I would agree, actually, in terms of, and I had it in kind of my big four context points. I think it remains one of the challenges in terms of being more efficient, reducing lead times, and also taking cost out. And therefore, I think it is one of the most connected areas of balance with that desire to achieve both those areas. Speed, less cost, improved, resulting in improved margin. And I think that, from my conversations, I think the start point for an efficient supply chain, it remains the same, actually, as it probably has been for a number of years now. And that is about understanding where products are manufactured. And it is fair to say that many retailers, brands have made changes to country of production splits, improving flexibility and balance particularly between near sourcing and far sourcing. It's pretty well documented, supported by dual sourcing. Again, big learning from COVID, not being over dependent on one particular geographical area. However, from my experience, the miss at times is not having a long-term global plan. So what do I mean by that? In summary, this is about having a very clear statement of intent in terms of to move to optimize supply and country of origin over maybe up to a 5-year period, certainly a 3 to 5 year period, but also supported by key rationale for change. So why are you actually moving to that particular country? And what's the associated impact in terms of key performance indicators, targets, financial aspects, etc.? And the reason why I say that is I think there has been a lot of changes. I think there's been some really good work done across the industry in terms of particularly that whole piece around far source, near source balance. However, is it truly, for many retailers and brands, is there truly a strategic plan in place, or is it more of a reactive piece? And we know that, I think we touched on in the past on this several times, Jane, that there's a real danger in terms of reactive and chasing a particular aspect, as opposed to having a very solid plan. So I think in terms of country of origin, it's about having that really clear long-term plan.
Yeah, I think that's really interesting. And I was talking to someone who runs one of the sourcing offices in Hong Kong for a major European brand. And we were talking about this idea of moving out of China, out of, trying to, what they're calling in headline news of de-risking. But as he was pointing out, and I think it was a very good point, and I don't know whether you'll agree with it as well, is that there's not necessarily as much risk as people are saying, and that there's more risk in going oftentimes into a new country where you don't really know what you're doing, where the cost could potentially be higher. What do you see around that?
I kind of agree with the conversation that clearly you were having. I think that, there was a big statement of intent and lots of words being used at the time of, during COVID and certainly coming out of COVID around becoming less dependent on China, and maybe some political pressures at foot as well. And some of the statements around, I'm making this up a little bit, but some of the statements around maybe a retailer saying, 40% of my manufacturing is from China, and I want to reduce that to 25%. From the conversations that I've had, that has not happened to that extent. I think there has been a reduction, but let's use that example of 40%, and then that 40% might have come down to 30 or 35%. And the reasons for that is, I think, exactly as you've just positioned. I think it's because there is a level of expertise that exists and a level of assurance that exists in China, possibly doesn't exist in maybe some other developing manufacturing countries. And I think, in terms of some of the concerns around the ethical agendas and need for assurance on that side of it, I mean, yes, they still exist. That's really, really important. But I think they are less red flashing than perhaps they were a couple of years ago. And the other thing I would say about my experience in terms of China would be that there is still huge opportunities. So I know people talk about rising labour costs, and we know particularly against that eastern seaboard, the labour costs in factories and suppliers have increased. However, there is still, China's a big country, and there's still huge opportunities in terms of maybe sourcing in slightly different within China, that you can still achieve the same commercial metrics as you were before. So I think that a combination of opportunities still exists in a combination of reliability would be another key word. And I think all those aspects kind of lead you to a place where China was important, is still important now, and is still going to be important in the future.
Yeah, I think that's a very good point. And I think that you're right. People are looking to balance things out a little bit, not be wholly dependent upon any one country, whether it be China or any of the other sourcing countries. They don't want to be wholly dependent. But I think that it's interesting that you've also explained that it isn't necessarily the situation that some of the headline news tends to portray it as. But still, with regard to sourcing, there is a lot of conversation with regard to nearshoring. What do you see happening around that?
Well, I think, if you quote, again, it's pretty well documented, if you quote Zara, kind of mother company, Inditex, in terms of they positioned in terms of their success around the balance between far shore and near shore. And there are many other examples around that. And I think that having that better balance between the two, the ability to be able to bring supply product faster than, say, sourcing from the Far East, particularly around those kind of fashion-orientated areas in terms of where the trends might not last as long as more sustainably, more long-term continuity product. So I think it's pretty well documented. What I see and hear from retailers is that they've really got their head around in terms of that whole balance piece, particularly around understanding, all the different aspects in terms of where margin is at play where cost and margin is at place versus speed, but also what that does in terms of reduction in markdowns, etc. Cash tied up in inventory, which actually I maybe should touch on very briefly. Actually, I think it's part of the conversation that possibly wasn't always in play, and I'm hearing an awful lot more actually. So particularly against that point around interest rates and cost of debt, the importance of cash flow, I think, is the most heightened that it's been for years. So therefore, you've kind of got to balance that off in terms of maybe, not always the case, but maybe less cost in terms of going Far East, and maybe more cost going nearer shore. But actually, there is less cash tied up in inventory sat on the ocean, and maybe different levels of commitment in terms of manufacturer. And it's interesting, if you look at, certainly I can talk from a European and UK perspective, pretty much all the trading statements that are now coming out, the annual year results, actually have a reference to cash flow more than they had in the past. And I think what's been clearly out there is that CFOs and boards actually want to basically reduce inventory, always have done, but even more so now, want to reduce inventory, cash tied up in inventory, which enables them to basically take that cash and invest it into the wider business, such as what we've already touched on, technology.
Right. So you feel that people are trying to free up some of the money that had been tied up in carrying inventory and move it out of there, part because the cost, of course, of carrying it is much higher when you have interest rates the way they are now, but also because, as you're saying,
exactly,
they want to be able to use that money more productively in terms of bringing specifically new technology into the organization.
I think so. I think it's a key factor, and I we know that there are brands out there who are doing an amazing job in terms of inventory reduction and weeks forward cover, and always have done and continue to do so. But actually, if I reflect a conversation I had with a large UK brand recently, and one of their senior sourcing directors actually said to me, he said, we've been let off the hook for a number of years. It's always been talked about to say, can you reduce your forward cover by maybe 1 or 2 weeks, etc. But it's never really been there flashing away as a really hard target in terms of you actually don't now absolutely need to do that, because to the point we've made, actually need to improve the profit loss statement and give the business more flexibility in terms of where cash and asset is being held.
Right. Interesting. You see a lot of the different earnings reports that have been coming out over the past year or so, and a lot of people are really struggling not only with sales, but also with profits. What do you feel? I know this is a broad question because every company is different, but do you see anything in general that you feel is really dragging down people's profitability?
Wow, it's a big question, Jane. I think there are obviously a number of so many component factors in terms of play around profitability. The one I would say is definitely the big question that's been asked is around cost of goods, and I think that, and you could argue that that's always been the case, but I think there's now a level of a board level of focus around truly understanding where the opportunities are to reduce cost of goods, doing it in the right way, ideally working with suppliers in the right way to do it, but actually truly understanding around, well, I suppose you go to the base level in terms of truly understanding what the cost of goods should be, even down to an individual SKU or line. And I think that, there's a number of, big projects underway. I'm certainly aware of a number of big consultancy assignments that are happening in terms of how do you bring all these aspects together, including some of the things we've already talked about in terms of things like country of origin, etc., ways of working, sourcing models, relationship with suppliers. How do you bring all this together so that you have a level of confidence that actually you've got the most robust, and technology? Sorry, we shouldn't lose sight of that important area. How do you bring all this together to ensure that actually you've got the most optimum way of managing that whole cost of goods agenda? So I think that, I know that's a kind of a very big piece and very high level focus, but I think there's so many different aspects that sit within that. I think that's probably the one at this moment in time. I mean, clearly there is always the conversation around markdowns, promotional stunts. Where's the right balance in terms of base price versus promotions in terms of the whole customer engagement around that. There's the whole piece in terms of online versus physical returns. Managing that, particularly from an online perspective, is quite an important one in terms of, and can hit, particularly as online retailers, hit quite hard in terms of overall margin achievement and profitability.
Yeah, absolutely. I think you're right. I think that everybody's trying to look and see how we can do things better. And I think the smart companies, as you're pointing out, are going to figure out where efficiencies are going to be able to get cost reductions without undermining the product quality. Because I think that's one of the big challenges, is that consumers are very aware of quality these days. And it's not like the old days, right, where you could simply reduce the quality and, as long as the price was cheap, nobody would really care as much. But now there is a lot of pressure.
I think you're right, Jane, and everything's so transparent as well, in terms of everything sits in terms of customer reviews, the whole social media aspect, etc. What customers also want, increasingly so, is products that are more sustainable, and therefore how do you achieve more sustainable at the same cost, if not maybe slightly less cost?
Yeah, and I think that brings us up to the next point, which is talking about sustainability and ESG. I mean, there's a lot of pressure, as you know, on companies to be able to meet stricter and stricter standards and new compliance laws coming in. So companies have to somehow manage that. Once something becomes a law, you have to comply. But a lot of what's being asked of brands is quite challenging, particularly at a time when people also are struggling just to be able to make sales targets and never mind turn a profit. What do you see around that?
I think you're absolutely right. And I think that, I mentioned sustainability in the context at the start. And I think, sustainability is firmly back on the agenda for retailers, especially fashion retailers. Although ESG governance and sustainability goals they remained a key part of corporate plans and values, what I would suggest, and certainly maybe what a number of people would acknowledge, is that a combination of COVID and the financial cost of living crisis has slightly slowed down that forward trajectory. It wasn't as maybe as firm on the agenda And now that's definitely back in play, to your point, and increasingly more so seen as that competitive point of difference, as well as, again, to your point, the requirement to hit corporate targets, regulatory, but also very firm public targets that have been set by organisations to say we'll achieve this by this particular date, which you could argue are as robust as regulatory pieces. And as we know, there are so many component parts at play here. So I think maybe a couple of shares around this. I think, what does it mean for sourcing and supply chain management? Maybe two considerations. Firstly, building a supply base where ethical and sustainability actions overall focus are aligned to the retailer is of particular note, particularly around data and transparency. So really ensuring that the supply base is aligned to the brand, to the retailer, and that there's a flow of information, data, and the whole transparency around that. And data in terms of hard performance measurement. And certainly, when I was a sourcing director, that was one of the key challenges in terms of organisation has got a very clear plan in terms of sustainability. And let's just pause and talk about the environment. But actually managing to get quality information from the supply base, even maybe possibly just tier one suppliers, never mind you then drop down to tier two and tier three suppliers in terms of what performance is being achieved against base measurements, things like carbon, water, etc., is a challenge. And certainly my discussions, I would suggest that's still a challenge. It was a couple of years ago, and it's still a challenge to date. So I think in terms of the first point is around ensuring that you have a supply base where you've got an alignment of views, but also you've got that hard data and that visibility and assurances, and the same applies obviously to ethical matters as well. I think the second point actually is around reducing waste. And again, out there in the conversation, as we know, over the last few years, but how do you eliminate waste looking at the whole life cycle of garment production from raw materials through to customer usage? And I've started working with quite an innovative, smaller company based in the Far East that's really focused around reducing waste, manufacturing waste. And it's been really interesting in terms of some of the conversations and some really great insight. Of particular note is that over 40% of waste actually occurs before the point of shipping. So, if you take the whole point from raw materials through to what the customer does with it in the end, 40% of the waste actually is before it even gets onto the boat or that point of shipping. So that whole piece around, and I've had some really fascinating conversations with this company, a combination of over-ordering of raw materials because we just need to over-order to be on the safe side, overproduction, how you deal with roll ends, how you deal with defective fabric. Again, I think the cutting processes are pretty good, but there's still elements of inefficiency in terms of cutting. And what do you do with damaged garments? So I think it's a big agenda. The whole piece of sustainability, reducing fashion waste, I think it's quite exciting. It's, back there flashing away. And there's lots of things that are being done and are still being done. And I think I wouldn't describe it from a senior director perspective. I'm thinking maybe around a big brand commercial director. I mentioned technology being that big question mark in terms of, so what are we going to do in terms of technology? I think this is probably up there in terms of the top two. The next question is, what are we really doing in terms of sustainability? So are we just tweaking around the edges? Or have we got a really robust, connected plan that our suppliers are on board with, aligned and engaged around, that we can track hard data and demonstrate the improvements we're making? So I think it's definitely up there in terms of technology and sustainability together.
Yeah, I think it's a really interesting way to look at it. I like the way you framed that. Now, speaking of that relationship that you have with your suppliers in order to be able to particularly achieve a reduction of waste sort of during the production phase, how do you see sort of the evolving relationship or the ideal new relationship, you might say, between suppliers and brands? Do you see a change? Is there a new vision?
There's a change, Jane. And, personally, this is always my most of interest and exciting area when I was a sourcing director. I think it is such an important area. And easy words to use, but this is about how do you develop true strategic partner relationships. And I think we already touched on in terms of use of words, openness and trust before. I'm going to make a statement actually, which might not be supported by some of your listeners, but on the whole, I believe that fashion and general merchandise has been late to the party around SRM in terms of supply relationship management. I say, bold statement, but I think he's been behind other consumer areas, been behind food and behind other big procurement areas in general. And I think it's so important because it's almost like the base foundation, in my view, for all the key sourcing strategy areas, some of which we've touched on. Everything that's on that supply chain director, that commercial director, sourcing director's pad, from sustainability through to product development, through to speed to market, it encapsulates everything. And we should also maybe pause and say that suppliers and manufacturers have now developed a capability and expertise that didn't exist 10 years ago. And this is a build on now, and the opportunity is much more than the fundamental basics, such as the capability to self-inspect. It's really around understanding fashion trends, innovation, co-creating amazing product for customers. And I think it's really important and really exciting. And as I mentioned earlier, it has to be built on trust and openness. And the starting enabler, and I used to talk about this quite passionately, is around understanding each other's businesses. The question really is how many suppliers really understand a retailer or brand's long-term strategy, and vice versa as well. And do they really understand the values at play in that organization? Do they understand the business goals? And I read a document recently, and it was a strategy document for Inditex. And it's interesting that they've actually got in their top 4 areas of focus, their strategy, basically, they kind of worded it differently, but supplier relationship management is in their top 4. And they then broke it down a little bit further. But there's one phrase that stood out to me was they used the phrase continuous dialogue. The need to have continuous dialogue between the retailer and brand at all different levels of functionality between those two organizations is in their view one of the key success points. So I think really, really important. I mean, you could argue also it links to supply. Well, I think it directly links to supplier consolidation, which is often an area that's talked about, and having a clear understanding of where the supply base is now and where it needs to be in the future. And I've always been quite surprised in terms of the old 80-20 principle. And I don't think it is quite 80-20, but it's not far off. The fact that for many brands, big companies, 20%, maybe, but probably higher than 20, maybe a third of their supply base manufacturers are generating 8% of their sales. And for me, understanding that and trying to eliminate the tail is an important aspect, and it connects together with supplier relationship management, because I think it's more challenging to have a great relationship with a very large number of suppliers. And certainly if you go to the 80-20, or that third of the guys that are producing the really large volume, that's where the priority is for SRM. That's where you need to really let them. And I think joint business planning will be another area of focus, and something that I was always quite passionate around, that relationship between the supplier and retailer and looking more long term.
Yeah, I think that's really an important point. And I think that it's an ideal way to be able to work when you are that closely integrated with your key supplier. I suppose one of the challenges from a supplier's point of view is being able to trust the brand enough that they'll stay with what was planned even when things go bad, right? And I think that what we've seen, not with everyone, but in some cases, and enough to probably scare a few suppliers, is that everything's good until something goes bad. So I think that you have a certain number of suppliers who are just a little bit shy about getting in too deep, so to speak. I don't know if I'm explaining it correctly, but...
You are exactly. And this bit comes back to this point around openness and trust. And I think, hence why I made that bold statement and said that I think fashion is a little bit behind maybe some other areas in terms of developing those relationships. I think it's sometimes still too guarded on both sides in terms of, and I'm not just talking about conversations around price negotiation, but right the way across the piece. I think it's still too guarded, and you have to get through that to then get into the real trusted quality conversations. And by doing that, then hopefully you do move into a place where actually it's far more robust and bigger than worrying about whether a retailer or a brand is going to significantly reduce or cancel an order, because also you're not just looking at the transactional aspect of one allocation or assignment. You're looking at much longer term, broader piece in terms of how you're truly going to grow the business, both organizations. And also we should say about shared value as well, which is often, again, not always there in the frame, but I think the very best out there are really, working up plans that actually the value that's created by doing things maybe in a different way, that value is shared between the supplier and the brand. And then in turn, that grows engagement and confidence.
Yeah, absolutely. I really think that nothing ever ends up being perfect, but I think that, as you're pointing out, there's a lot more motivation for brands and suppliers to be able to create a more integrated supply chain, because everybody throughout is facing so many challenges right now. So I think you've raised some very important sort of perspectives, you might say, that we need to be looking at and considering.
Thank you. I think if maybe, Jane, I could just kind of attempt to summarize a little bit. Would that be okay?
Yeah, sure.
Because I think we've covered quite a lot, actually. Yeah, no, thank you. As always, and I always enjoy our conversations. They're very thought-provoking. So what is the future of sourcing? I often ask myself this question and kind of try and build it into conversations that I might have with retailers and brands. I think the first thing I'll say, the future of sourcing, I think is really exciting. I think everybody understands the success principles and where future value opportunities lie. I'm sure there's going to be some of your listeners who are listening to this conversation in the future are going to go, well, actually, okay, all makes sense. And I've heard those conversations and those aspects before. However, again, I'm going to be slightly bold for the second time during this discussion. I think there is one inhibitor, and that is around embracing change. And this comes down to people and culture. And from my experience working with both retailers and a number of suppliers, as I said, everyone gets it. Everyone understands and gets it. However, as we know, there is a huge difference from knowing what to do to then actually doing it.
Yes.
And I think that is, in my view, the kind of crux as to where we currently sit as we edge towards the end of 2023. And I think the biggest retailers in the world are embracing change. And there are many other examples out there doing a sterling job. However, in my view, there is still a large number of global retailers that are still operating in a very transactional way with their supply base. And maybe one for a deeper conversation and a conversation on another day. But I think the heart of the challenge and the catalyst for change is around, a relatively basic, but it is around roles and responsibilities. And in summary, who does what and where? Right. And that was, when I was the sourcing director, that was always the big question I was attempting to pose. But this is about the relationship between the buyer, the designer, the supplier, the sourcing team, and being really clear on accountabilities and where task is done and who's got what responsibility. And, I think that there's still an opportunity to move away from tradition and really embrace some of the things that we've talked about. And as I said, Jane, everyone gets it. Everyone says, yeah, I know that. I know that's where it needs to be. But actually, there is a big difference then between actually doing it. And maybe to kind of bring alive, finally, I think, one of the things I have a view on is that a sourcing team now is less about being hands-on and dealing with full approvals, making sure shipments are going off on time, managing purchase orders, working through Excel spreadsheets, but is now about having a truly dynamic team of colleagues with really good digital analytical skills, embracing and optimizing the tools available and the technology that enables them to free up time and do things in a different way. And where I think that time needs to be really spent is supplier relationship management. So free up tasks, have those skill sets in place that you can have the confidence in the tools and technology that you've got supporting you, but free up tasks that enables you to then invest time with suppliers. So hence why I say that I think the future is very exciting. I think the rewards are great. And I think, by developing further those ways of working, I think they will only lead to further commercial success, customer sales, and also just one final point, actually, about people who enjoy doing their job, actually.
Right.
Really rewarding for colleagues. Because for me, part of the job was and is having those really great conversations with suppliers. But often the challenge is, well, I haven't got time to have those conversations because I'm doing all these other tasks. So yeah, I think the future's positive.
Well, I think that's great. And I think that everyone sort of needed to hear that, if you know what I mean, because everything that we tend to be hearing for years now has only been sort of bad news. So I really appreciate that you're able to bring this full circle and leave us on a note of hope and a note of optimism.
Absolute pleasure. Thank you, Jane.
Yeah, and thank you for joining us here, Dean. Really, it's always wonderful to have you on the show.
Great. Thank you. Look forward to speaking in the future again.